Alright, so we were at the Japanese candlestick patterns. So when a candle opens at whatever time frame that you select, let's say you want to select a 15-minute duration. So if the price of a particular asset, or let's take Bitcoin for example. So let's say at 7:01 the price was 9,950, and at 7:15 the price closed at 10,000. So it opened at a lower price and it closed at a higher price. So that is the reason why the candle is going to be green in color. So it is called as the upper body of a candle and the lower body of a candle. Now within those 15 minutes, so whatever is the lowest price possible, so that wick that you can see, the black colored wick, so that is the lowest that the price has gone. So let's say the candle opens at $10,000, it went all the way down till 9,950, it went all the way up to 11,000, and it ended up closing at 10,020. Okay, so it opened at a lower price, closed at a higher price, and in between it ranged at the lowest and the highest point. So these two upper black colored wicks that you see, so we call them as shadows or wicks as well. So it's a lower shadow and upper shadow, and the green and the red part is called as the body of a candle. So I think it's very important to understand what a candle represents and what it signifies. Many of you might have not been aware that, okay, this is how a candle is denoted. So that is how a Japanese candlestick looks like. So it consists of a body and a wick. So the lower wick is the lowest point that the candle has, that the price has gone in that duration. Upper wick is the highest point that the price has gone in that duration. And wherever it opens and closes, if it closes at a point higher than when it opened, it's a green candle. And if it closes lower than the point where it opened, it is a red colored candle. So that's a basic Japanese candlestick pattern. Now, what does a candle signify? So let's go to the next slide. So let's say that we open the candle. We are looking at a green colored candle right now. So if the body of a candle is much bigger than the wick, so it's a strong candle, okay? And if it's a green colored candle, so it's a strong buying pressure. So what it means is it opened lower, it went up quite a bit up, and then it closed at the topmost point of the wick. Okay, so that means that buyers are very much in control. So it's whenever the candle body is full and the wick is small, so it's a significance, and it is called as a strong buying candle. Similarly, if the candle were red, so it would have been a strong seller's candle, or we call it as a weak buyer's candle. In this case, it is a strong buyer's candle or a weak seller's candle. Okay, so if the candle body is big and the wick is small, what it means essentially is we opened the candle at a lower price, we went all the way up higher, and we did not come back down. Okay, we closed at a much higher price. That's a strong buyer's candle. And the next slide you can see, so this essentially signifies a weak buyer's candle. The reason is that we opened the candle at a lower price, we went all the way up, okay, and the candle, like during the duration of the candle, we went all the way up, and then we ended up closing close to the point where we opened. That means there were buyers, but also there were a lot of sellers in that particular duration. So the price was rejected. So when the wick is higher and the candle body is smaller, so it's a weak candle. So if it's a green candle, that means, and the wick is higher, it's a strong price rejection, and weak buyers are in control, strong buyers are not in control. So there are a lot of sellers compared to number of buyers, but that is the significance of a weak buyer's candle. But it is green in color, so essentially number of buyers are much higher than the number of sellers, but not by a huge margin. In this case, you can say the number of buyers are way higher in number than the number of sellers. So that's a strong buyers and a weak buyers signal. So this is basically one of the significance of candle. So let's move on to how do we compare two candles. So the next important, one of the most basic way of understanding a candlestick pattern is by comparing two candles. Okay, so the first parameter that we are going to see is a bullish engulfing candle. So many a times I might have typed out in our chats that we are seeing a bullish engulfing here. So what it means is, so as you can see here, the red colored candle body is much smaller than the green candle body. So what it essentially means is this green candle has eliminated the entire price action of its previous candle, and it was, the previous candle was red and the following candle, so the body of the candle is bigger than the body of the green. The body of the green candle is bigger than the body of the red candle, and even the wicks have opened and closed at a much higher range. So essentially this green candle has entirely engulfed a red colored candle, as you can see it, and hence it is called as a bullish engulfing candle. Now, a bullish engulfing candle on a higher time frame, like if you're seeing a 4-hour pattern or a 1-hour pattern or a daily pattern or a weekly pattern, and if you see that a candle has opened and closed at a much higher range than previous candle, so that we are going to classify that as a bullish engulfing candle, and it is a very strong signal for a price reversal. So generally what happens post a bullish engulfing candle is an example that we are going to study now. So this is basically a bullish engulfing, and the opposite of that. So let's say the price action was green in the initial candle, and then we opened and closed at a red candle. The following candle was red, so this is a bearish engulfing. So it is a sign of a trend reversal from bullish to bearish. And in case of, and you see a bullish engulfing candle, it's a trend reversal from bearish to bullish. So we'll see an example of how this candle looks. So let's take a look at the next engulfing candle. So as you can see here, there was a green candle. Now this green candle was followed by a red candle, which wicked much lower than the green candle, and above also you can see it wicked much higher, and the candle body has totally engulfed this particular green candle. So as you can see that this was an entire engulfing, and following this candle, as you can see, the price has started dropping down. So this was an example of a bearish engulfing. Also, if you can see here, so the green candle is much bigger in body as well as wick compared to the following red to the preceding red candle, and after this we have seen a positive price action, and we started reversing our trend from being bearish to being bullish. So these two are good indicators in a way to essentially understand in which direction our trend is going to change. So bullish and bearish engulfing are good ways to identify trend reversals. So this is an example of US dollar versus gold chart that I had dotted down for you guys. We'll see another example here of bearish engulfing. So resistance and supports are a topic for later study that we'll be seeing. So let's say this dynamic resistance, or we can also call them as EMAs or MAs. So this was one of the EMA. So as we already know that once a price point reaches the resistance, it starts trending downwards. Now when is it even positive sign that okay, this is the right time to open a short? So as you can see here, the price has reached the a particular point wherein it has reached the top of the resistance. Okay, this green candle is followed by a red candle which has totally engulfed itself. So the candle body is bigger than the green body, and it has happened at a resistance level. So this is a very strong indicator to short or to sell your assets. So if you have been long from this point, and if you see that the resistance has been touched, so essentially you can start opening your short at this point. Probably keep your stop loss a little bit above over here. So in case it's a trend reversal, we get out of a position and we opened long here. But as you see that this was an engulfing, a bearish engulfing. So this is a very strong indication that okay, your short, this is the right time to open a short. So you can place your short somewhere in between this candle. So the next candle, you can see that it has wicked a little bit up. It takes your short, and then you keep your stop loss above this resistance, and that is a very good risk to reward ratio as well, and the trend continues going down. So this is an example of US dollar to silver. So that's a bearish engulfing example. I'm just going to quickly check the chat part if everything is good. Okay, no problem. So let's okay, I'll take questions in a bit. Let's first get done with this example. All right, so the next bullish candle pattern that we have is a hammer. Now the name itself is self-explanatory. So a hammer, essentially what it means is the candle opened at this particular point. So you can see this green, the lower end of the body. So the candle opened here, then there was a lot of selling pressure. Okay, so the wick, it wicked all the way down, but buyers were very much in control, and immediately all of the sell orders were being bought, and we opened at a price higher than the point that we opened. So when the candle body is small and the wick is downwards, that means that the buyers are very much in control, and there have been lot more buy orders at this particular range. So it's a hammer, and hammer is again an indication of a price reversal from bearish to bullish. So hammer essentially looks like a hammer when the candle body is very small compared to the wick. Okay, but there is a significant candle body that is present. So we will see an example of hammer. So as you can see, okay, we are seeing a lot of random price movements here, but at this particular point, the green circle point that you can see, so if you look at the small green candle that is following, so the red candle was essentially it went down, and there was a lot of basically a lot of sell orders were there, but they were being bought up immediately. Following that was a green candle, which is not exactly a hammer, but we can see that okay, the price was, whatever price was dropping, it was bought back immediately. So that means that at this particular point there is a lot of liquidity. Okay, so price is not dropping beyond this particular point, and whenever it is dropping, it is being bought back up immediately. So this is a hammer candle for an example, and essentially when we reach a point where you see long wicks, small bodies, and this is an example of a hammer, and price generally starts reversing from that particular point. So if it's a bullish engulfing or a hammer, and which is followed by a big green candle, so generally it's a good sign that okay, the price is going to reverse now, and we start longing our asset with a stop loss just below the last wick. So this is the wick. So what I would do at this particular point, okay, I've seen a hammer forming, so I open my long here, I keep my stop loss below this wick, and then I'll be safe. Okay, so I know okay, this if it goes beyond a particular wick, then this hammer gets invalidated and we drop further, and I would like to get out of my position with a stop loss. So this is an example of a hammer. And the opposite of a hammer is a shooting star. Now in case of a shooting star, we also call it as a hanging man or an upside down man. So the number of sellers are very much in control. So what happens in this case is, see, we opened at a particular point, and then we went all the way up. Okay, there was a lot of buying that was happening, but we started dropping drastically. There were a lot of sellers in this particular area. There was a huge liquidity for sellers, huge liquidity for shorts. We started selling off, and then we closed at a point which was lower than the point of entry. So this means essentially that there's a lot of selling pressure, and that is the time when we decide to open our shorts. It is a trend reversal change from bullish to bearish. So we can see an example. It is exactly the opposite of a hammer. So we see a shooting star. So a shooting star at a resistance is one of a classic example for us to open up a short. So what you do is, this is our resistance areas. So ideally I would open my shorts here, and over here as you see that the price tried to cross the resistance, but it was a failed breakout or a fake breakout, and it again went back down. So now you know okay, there is a strong price rejection out here. The candle body has closed below the resistance, so it's a safe place to open a short. So I would probably open a short here, keep my stop loss above this particular wick, and then we see a continuation of trend downwards, and this is a good risk to reward ratio, and wherever the support is at a lower level, I will close my particular short. Okay, so that is an example of shooting star or hanging man. So hammer and hanging man are two bullish and bearish opposite candles, and similarly, so this candle is a candle in itself. So now we are going to see a combination of candles and how that can help us determine a price action. So we'll see the next one, which is called as a morning star. Now morning star again, so the candle patterns that we are seeing right now are for trend reversals. So if we see a red candle followed by a price action of candle which was entirely insignificant, what it means is the price opened and closed at the same point. It went up, it went down, it was not able to decide which direction it wants to go, and it opened and closed almost at the same point. So these kind of candles are also called as dojis or dojis, however you wish to call them. So when the candle opens and closes at the same point, and it has a lot of price action, it is called as a doji. So there's a green candle followed by a doji, followed by a, so there's a red candle followed by a doji, followed by a green candle. So this essentially means the price is was dropping, then it was not able to decide which area it wants to go, and then now there is some sort of a decision that has been made. So this essentially is a trend reversal from bearish to bullish. So morning star example we will see of Tata Motors. So as you can see here, a classic example of a morning star. Okay, so there was a red candle followed by, so it essentially doesn't have to be an exact straight line, it could be a small body. So you can see there was a red candle followed by a small candle which was not essentially able to decide exactly if it wants to be a red or green, followed by a green candle. So this is an example of a morning star, and morning star is generally followed by a bullish trend reversal. So you can see that the price action has started moving upwards. So you can identify such setups for scalping shorts or longs, and that's a very good way. And the exact opposite of a morning star is an evening star, wherein a green candle is followed by a doji followed by a red candle, and it is an example of trend reversal from bullish to bearish. So we'll see an example here of sugar. It's a commodity, so you can see this is a resistance or an EMA or dynamic resistance. There was a green candle followed by a doji followed by a red candle. So this essentially means that the price is going to change. This red candle gives us a confirmation, so I can open my short somewhere around the body of the red candle with a stop loss above this wick, and we know that the trend is going to continue downwards because we have seen an evening star. So it's a trend reversal from being bullish to being bearish. So that's a good example. Again, just like we saw a hammer. So a hammer without a body essentially is called as a dragonfly doji. So it is dragonfly doji is basically nothing but a hammer without a body. As you can see, we had seen here. So this is a hammer which has a body. Now if this body doesn't exist, it means that the candle opened and closed at the same price, but it started going in a particular direction. So we saw this dragonfly doji. So it's a dragonfly doji generally is a bullish candle. It is a much stronger candle than a hammer candle. It works as a hammer, but a much stronger, I would say it's much stronger indicator of a price reversal than a hammer. So the candle opened here, it went down all the way, and it went up and it closed at the same price. What it means is below this particular price there was a lot of buying that was happening, so it was not letting the price drop down lower than this. There was a lot of price happening. So this essentially identifies us the bottom of a trend. If you can see this dragonfly doji, it kind of identifies which is the bottom of a trend. So as you can see here, the price went down, it got back up immediately, and it was followed by a green candle. So it also looks sort of like a morning star. This is a hammer, it is a much better hammer, which is a dragonfly doji, and this identifies, okay, essentially this becomes my bottom. So what I could do is I could open a long here with a stop loss below the wick, and I know that the price is going to reverse from here and enter up into being bullish. And the exact opposite of a dragonfly is a gravestone doji, which is a stronger version of a hanging man. So as you can see, candle opens and closes at the same point, it goes up, and there was a lot of selling pressure. So this identifies a top. Like dragonfly doji identifies the bottom of a trend, gravestone can identify the top of a trend. So you can see an example of Suzlon energies. So we saw that the candle went all the way up, it went down, and we saw, okay, this is a resistance level, so it was probably a false fake out because of the doji that you can see here. And I would essentially open my shorts at this particular area with a stop loss at above this wick, and we know that the trend is going to keep going downward. So this is an example of a gravestone doji. Next up is 3 black crows. So this is a rarely used phenomena, but it works pretty well. So when you see 3 back-to-back red candles, essentially and especially on a much higher time frame of, I would say, beyond 1 hour and above. So if you see 3 1-hour red candles back-to-back, big candles with very small wicks, so this identifies a change of trend, and the following graph is going to be a highly change of trend from bullish to bearish. So when you see 3 big fat red candles, these are called as 3 black crows, and it is generally followed by a much lower price action. So there are different types of these black crows. So you can see that these have almost same bodies, and wicks are very small. In few candles there are no wicks, only bodies. I mean, it can be of these different types where the wicks keep on changing. The strongest 3 black crows, I would say, are with a much higher body and a much lower wick. So number 2 would be one of the strongest 3 black crows wick. So as you can see that there are different types, 8 types in which the candles can be, and we'll see an example of 3 black crows. So it was of HDFC Bank. So the price was going upwards. Over here we weren't sure in which direction it could go. So we saw a red candle followed by another red candle followed by a third red candle. So you can see 3. So this I have taken a 4-hour time frame. So on 4 hours there were 3 red candles. So these signifies 3 black crows. Basically what it means is we have reached a point of resistance. We are not able to break through the resistance. We are being rejected at this point beyond and beyond, and it is followed by a massive sell-off. So this is a confirmation. Okay, now this is a confirmation of trend change. So I could probably open my short here with a stop loss above the first candle of the 3 black crows, and you can see that the price action has started moving downwards from here. Similarly, the opposite of 3 black crows is 3 white soldiers. So when you see 3 green candles back to back, it's a strong indication of a change of trend from being bearish to bullish. So there are 8 types of these candles. Number 2 is one of the strongest, wherein there are 3 full candle bodies, no wicks. That means the candle opened here, and this was the lowest point, closed here, opened here, closed here, opened here, and closed here. So these are 3 white soldiers, and you can see an example of Maruti, which is a automotive company. So you can see 1, 2, 3 green candles back to back. So this is probably the support area. It is bouncing off the support pretty well, and 3 back-to-back 4-hour green candles have been bought back, and this essentially signifies that there is going to be a change of price trend. So we open our longs somewhere here, keep a stop loss below this first candle, and you can see a good risk to reward ratio out here, and probably wait till this candle closes above, and probably you can start taking your profits at the resistance level going ahead. So yeah, these were the basic candlestick patterns. We have I'll just summarize all of them for you, and then I'll open slots for questions. So the bullish reversal pattern. So we have studied these candlestick pattern to understand how we are going to change our trend. So the bullish reversal patterns essentially are the hammer that we saw. Hammer and dragonfly doji are essentially similar ones. Dragonfly doji is a hammer without a body. Morningstar is a red candle followed by a doji followed by a green candle. In bullish engulfing, the green candle is going to entirely mask the red candle, and 3 white soldiers are 3 back-to-back higher time frame green candles. All these patterns are bullish reversal patterns, and in bearish reversal patterns, we'll see a hanging man, which is essentially an opposite of a hammer, wherein the price opens at a higher price, it goes up all the way, and then it closes at a lower price, where the opening and closing price are very close to each other, and the wick has been very big. Evening star is a red candle followed by a doji followed by a green candle followed by a doji followed by a red candle. Gravestone doji is essentially a hanging man with a very smaller body. Bearish engulfing is a red candle which is masking the entire green candle, and 3 black crows are 3 back-to-back red candles on a much higher time frame. So these are all the candlestick patterns that we have seen. There are more than these patterns, but these are the basic ones that are there. So I would recommend you all to go through these patterns. I'll be sharing this entire PowerPoint presentation with you on our Discord. And now I'm going to open slots for questions. So let's begin our question area.